how to start in commercial real estate investing. In this episode, if you're not sure where to get started in commercial real estate investing, by the end, you'll know exactly where to get started. So stay tuned. So first of all, you want to know where to go to find some of these real estate deals. I use LoopNet, there's CoStars, there's some other commercial real estate websites, kind of like you have Redfin and Realtor and Zillow and all these other ones. There's commercial ones as well. So I start to get familiar with what's going on in my market. What do I see a lot of? So I start following those properties, and just like all the other ones, they start to fade off. Like once you click on them, they'll fade to a light red versus a dark red, right? So going through that, what I'm doing is I'm just trying to get a better understanding of the market. What kind of products on the market? What's the price per square foot? You're also going to see what's called cap rate. Oftentimes on these listings, they go through cap rate. Cap rate is how you could determine what this is producing as far as return. So let's get into that a little bit. I'm going to explain that, and I expect a comment from a good friend of mine that's going to talk to me or talk to you guys about what cap rate is as far as return. Here's how I determine it, right? So as a seller, I want the lowest cap rate as possible. What that means is I've pushed the value so high that my cap rate, my capitalization rate, has gone down. The higher the cap rate, let's say I got a 10 cap rate. That means that's a very good deal. Let's say I put debt on it, right? It's basically all of my expenses, right? It's my gross income minus my expenses, but excludes my mortgage. So let's say I have a 10 cap rate, right? 10% cap rate. Well, if I have a 5% mortgage, what's left over when it's done? 5%. So I have this 5% extra money that it's actually producing net every single month. So the reason why it's important to me is because I'm going to leverage debt as much as possible. So let's say in that same scenario, I have a 4 cap rate, but my interest rate is at 5%. I'm actually negative. I'm actually losing 1% every single month. I'm looking at cap rate just as a general overall view of what's going on with that property. And then I'll start to dig a little bit more. The other thing I'm looking for, you're basically doing an initial quick underwrite in your head. Price per square foot. You want to look at the price per square foot, and you'll get good at this of figuring out what is industrial trade for, what does, multifamily or retail, and all these different things. You could start to figure out what they're selling for price per square foot. It's another way for me, like if I'm, let's say something's selling at retail around $100 plus a foot, and I could pick it up for $50. Well, hey, I could reposition it, still have money left over, and have money equity for a flip, or I could refinance it and still have that equity to make it cash flow correctly. Does that make sense? So ultimately what I'm trying to do is I'm trying to understand the market and how to briefly or quickly underwrite a deal. Once I get the basics down here, now I want to start networking with commercial real estate agents. There are a lot less commercial real estate agents than residential. So I'm looking for someone that's flexible that I could build a relationship with. I work with one commercial real estate agent. On residential, I work with many. But on commercial, I have one relationship. That person knows exactly what I'm looking for. And when it comes on the market, they're hitting me up, or prior to them coming on the market, they're hitting me up, telling me, hey, this is coming on the market. I think I could get us this deal. So anyways, food for thought on that. Make sure that you build a good relationship with someone that understands what you're going to do. For me, I try to stay super flexible on what the use is, but I try to look for lower price per square foot, which means I have to do a little bit more work to the property, but it also means I probably will get seller financing. Again, I'm sharing with you what I'm doing. I'm also sharing with you what I think it takes to be successful in getting started in real estate investing. You're picking up stuff that a lot of people are scared away from. And in doing so, you're able to kind of create this machine, if you will, and name and reputation for yourself at the same time. So just something, again, to set yourself aside and look for when getting started in real estate investing. Get a good relationship with a good realtor. So we've gone on and figured out, okay, where we could look for properties, also agents helping you find properties. So now we want to understand, we've gone through a little bit of how to underwrite a deal. You're going to have to do your own area and start doing due diligence on how to do that. Pay attention to cap rate or cash on cash return. These are the things you want to pay attention to. The other part is now funding. How am I going to fund this deal? Are you going to bring in a lender? A lot of assets that I look at, they're non-performing assets at the time, so it's hard for me to get a lender to come in and fund those. What I asked the seller to do is do seller financing on it until I could get that asset repositioned. This is something that you might want to look at doing too. So seller financing, I could also do syndication. I could raise capital from other investors and buy the building and take the rehab money down with it and reposition that. So it's another way that we've talked about in other episodes. So you could do that as well. You could do private money or hard money. That's another way to take down almost all the same options available for you in single family are available for you, or in residential are the same ones that are available for you in commercial. Sometimes more, because you could get better syndication deals, and you could also get typically seller financing on a lot of these deals as well. When you get going in real estate, on commercial real estate, try to keep an open mind on everything, on the deal, what asset class it is it the highest and best use of what it's currently being used for? Also, how am I going to fund this project? What are the best ways to fund this project? You also have longer timelines to fund these things, and could usually draw out your escrow much longer than you can on a residential property. So you want to take advantage of all these different options that are available to you. Here's what's crazy. The more deals I do, especially on higher stuff, the more expensive, the less money I bring to the table. You'd be surprised. I'm baffled. The more expensive the deal is, actually the less money you end up bringing. You have experience, I say it over and over and over again. You learn how to find these deals, and you know how to underwrite them and then articulate them and show an end investor that would want to partner with you, or potentially partner with you. If you're able to articulate it better than I am this video right now, then you're going to get them to want to invest with you on that asset, bringing in none of your own money. So anyways, think about it. If you know how to find the deal, you'll know how to fund the deal and make a nice profit in doing so. I hope that you've enjoyed this video. If you have, click on the link to subscribe below. Also, if you just want to get going in commercial real estate and you're like, that was a great video, John, I really need more help, it's exactly what we're here for. Click on the link below. Set up a one-on-one appointment with myself or one of my team members. We'll help you get you going, at least kind of sort some things out and get you going in the right direction. Thanks for watching. Talk to you soon.